Hey everybody, it's Saturday. Time for the week recap, all the stuff you missed. But we're also going to go into when will Bitcoin find the post-halving equilibrium. So critical to figure out exactly what's going on. We've chopped sideways for 7 months and people are frustrated. Where's my $100,000 Bitcoin? Anyway, sometimes the best things come to those who are patient. But we're going to break it all down today. Thank you as well, Sean Donnelly, for being here. And who did I miss? Andy in Australia is up, and everybody else, the whole team. Thank you all the familiar faces. Let's jump in and talk about what's going on. So the crypto market cap is just under 2.2 trillion. Bitcoin price has been so steady around 62K for the last 24 hours. It's insane. Dominance 56.9, fear and greed 49, lots of nines. And let's jump in. And not financial advice, of course. Let's look at the past week crypto in Bitcoin terms. Obviously, Bitcoin's flat, but ETH down hard, 10.38%. Solana down about 8%. Avalanche down, dark red, ICP dark red, etc. We'll break all that down. What happened in dollar terms? Well, Bitcoin, just depending on the minute of the day, eked out a tiny 0.1% gain. And the reason that is important is because the ETFs bled, and the Bitcoin price stayed the same. So it's actually a very positive sign. Sometimes the ETFs take in a lot of Bitcoin and the price also stays the same. So that's just what we're used to over the last 7 months. Let's talk about the black hole real quick, and we get into a whole bunch of other information and news as well to share, and charts. This is what I call now Redtober. ETFs down $335 million. You see the big dumpage there by Fidelity on Tuesday, 144.7 million. And happy to report that Grayscale hasn't been dumping very much at all. 5.9 million on Tuesday, 13.9 million on Friday. And Blackrock is nibbling away a bit. They had their third negative day on Wednesday, down 13.7 million. But they came back on Thursday with more than double that, nearly triple that. And they had big days on Monday and Tuesday. And Blackrock is doing a world tour, shilling Bitcoin on our behalf. So can't argue with that as well. Let's look at the chart. We are still below trend. Pink line is the key one to focus on. And yeah, it's been pretty lackluster so far. But remember, things could still happen. We'll talk more about equilibrium in a minute. In terms of what happened this week, 4,554 Bitcoin were dumped over 5 trading days. And considering 450 are issued a day, that doubles that quite a bit by the tune of more than twice. Anyway, point is we had 3 negative days, 2 positive days, and not a great week so far. But remember as well, there was a lot of noise and concern around war in the Middle East, war in the Ukraine. There was a strong jobs report, which meant rates maybe would go up again. We'll talk a bit about that in a minute too. So, first of all, the big story today, I want to shout out to Jesse Myers, Croesus, on Twitter. And he called this out. In fact, somebody tagged me on it, so it got my attention. But the Bitcoin halving was almost 6 months ago. You could argue, yes. And I gave this presentation at MIT the day after the halving, explaining why it would take 6 months before Bitcoin's price starts to run. And the time is nearly here. Finally, buckle up. So I watched his presentation. It's 13 minutes. It's really good. Check it out. Check out Jesse. Follow Jesse. Smart fellow indeed. But what I wanted to drill into is the point he made about equilibrium. And we spoke a lot about 90 days post-halving. Nothing really happens with the first 90 days. Well, it looks like it's 180 days before something really happened. But he broke down the historical charts, and the result, each halving creates a bubble with a higher high and a higher low relentlessly into the future. Now, I would argue the impact of the halving is halved every single halving. But that being said, the point is we do have an issue with equilibrium. Now, I put in a little ruler, hope Jesse doesn't mind, on the bottom, indicating a 1, 2, 3. Oh, ruler's off. Got cut, got squished. Formatting is off. But the point is, I did measure what is going to happen. Now, when you zoom into the halving cycle, each 4-year period, because my ruler screwed up the graphic that I overlaid got cut and compressed. It should be a 4-year period, but I did measure it out. So basically the first 6 months, nothing really happens. Then the 12 months after the 6 months past halving. So the first 6 months after halving, nothing happens. The next 12 months is when all the action happens. And that will take us to circa October, November 2025. But if you look at the chart here again, look at those big squiggles above the halving price. That's when things go kind of parabolic. And the key part of his analysis was basically the bubble goes to the upside, i.e. goes above the equilibrium price, which is the dotted line. And it also, right now, you could argue it gets oversold in the bear as well. So look at the dotted lines. They are the equilibrium price. And I hope Jesse's okay with how I'm explaining his chart. But the most important thing, I think, is the volatile markets are never very efficient. Sometimes things are overbought. Sometimes things are oversold. And that can be seen here. But the real magic is to wait for that equilibrium, that dotted line. And that's where you should play. That's how you should view Bitcoin, to hold up until the equilibrium, maybe a little bit further, then exit, wait for it to be oversold under equilibrium, but all because of this chart next. This is the Bitcoin equilibrium. And the easy way to look at this chart is supply and demand. Now, if we go back to all the way to the right, you can see 2020 to 2024 cycle. And then what we have now, the 2024 to 2028 cycle. And then the 2028 to 2032 cycle. The point is the quantity, the amount of Bitcoin hitting the market is halved every time. And to find market equilibrium, we need to find the intersection of the supply line and the demand curve. Demand curve is red. We have Blackrock pushing Bitcoin, and the supply curve is blue. These things, because of the laws of economics, the laws of supply and demand, they need to equate. And as the supply shifts left, i.e. it decreases over time, so wrap your head around that. We're moving to the left into the future. Normally a chart, you'd think you'd go to the right, but this is his chart, and I get it. But as the supply shifts to the left, over time, the equilibrium price must rise to restore balance, given the constant or increasing demand. So the point is, we have not reached equilibrium. It will, because I believe in the laws of supply and demand. Just like with the miners, we'll talk about the miners as well. They are also now feeling the pain of the halving. And now the average miner price to be profitable for Bitcoin is about 77,000, up from about 40,000. So all the pain is coming into the system, but it takes time. Now, soon, the supply crunch will shock the system and equilibrium will be met. Thank you, Jesse, for that. Hope that helps. Now, we have Marty in his Wyckoff 2024 plan. Here, just a quick update in his chart. We always talk about this on DCA and Mondays as well. But the blue line is Bitcoin price. Yellow line is the prediction going forward based on Wyckoff reaccumulation. And the blue box is the supply zone. That's the sellers and short traders. The green box is the demand zone. That's the buyers and long traders. And the left-hand box shows liquidation heat map in bottom left-hand corner. And the right-hand box shows the Wyckoff theoretical distribution. The point is, the supply zone and where we get into the demand zone ties directly into this. It's just not in equilibrium yet. But typically, if we look at this chart again, it happens. We hit that equilibrium, starts at 6 months after the halving, and we are right at that juncture right now. So we'll see if history repeats. Maybe it won't. Maybe the price will be manipulated forever. I don't know. But these are very, very compelling, and we'll be watching this as we go forward. So thank you both, Marty and Jesse. Also, Bitcoin and Sortino ratio over the last 12 months. We always like to keep an eye on where things are compared to other assets. Is it worthwhile holding Bitcoin, of course? And this from Econometrics. 2 assets pop out from this chart. Bitcoin, obviously in the top right, has the total best returns, and gold has the best risk-adjusted returns. And this is the kind of like the battles of the store of value. Actually, when you look at the chart more closely, you'll see that gold not only has a good risk-adjusted return, but it also has nice returns in general. I don't necessarily agree with that, but gold has been on a tear over this year, especially considering it's normally a very stodgy asset, doesn't do anything for 10 years and then it pops. Well, it has popped, but it's popped because of the amount of money printing and concern about central banks, concerns about wars, concerns about absolute crazy debt all around the planet. That's why central banks in places like China are stacking gold like there is no tomorrow. And this is the Sortino ratio. And it's used to measure risk-adjusted returns in this chart. Sortino ratio is similar to Sharpe ratio, but it focuses on downside risk as well. And it measures an asset's return relative to its downside volatility. And this makes it particularly useful for comparing assets with different risk profiles. Obviously, the reason gold is better is because it doesn't have the same downside that Bitcoin has. And given gold has very little downside over the last 12 months, it's no surprise it performs better as a Sortino ratio against other assets. So super interesting analysis there as well. That's why I said kind of at the beginning, watch the equilibrium. When we spike above it, ride that train, and then be careful with stop losses. Sortino, because you don't want to be holding the bag all the way down as well, if we does go down, of course. And another cool view of Bitcoin versus S&P 500 monthly returns. We had a bit of a Friday pop because of the job market, but it wasn't enough to keep Bitcoin out of being a little bit of a red week. It's actually a flat week by my calculations, but its outperformance of the S&P 500 during September was noteworthy. So Bitcoin is gold. September was a surprise. September is normally a bad month for Bitcoin. So Rectember didn't happen, but we had our Rectember in August. That was the difference because of the carry trade unwind. And the bad months are much worse, but the good ones, as we saw in Feb of this year and March, can be explosive. So again, Bitcoin moves a lot faster than the S&P 500, and on average, the gains per month about 7.4% versus 2% for the S&P 500. Either way, it's good to have a mix of both. So let's jump on to more news. These are the gainers, since we're talking about big gains over multi-periods, not just year to date, last 12 months, over cycles, etc. But this is from Milk Road, and Bitcoin has surged over 526% since 2018. Now, they were very clever. They chose 2018 on purpose, deliberately, because it was one of Bitcoin's worst years. And the QQQ in this time frame is up 186%. Sorry, it's a bit fuzzy, but I tried to zoom into their chart. The S&P 500 is up 102% since 2018. Gold is up 92%, and TLT, the bond, is down 20% since 2018. If you're holding bonds, you got hammered, and that's before you even take into account debasement. So net, whatever way you skin it, other than the Sortino ratio over the past 12 months, you're going to be just fine in Bitcoin. It outperforms everything. Now, there's been a lot of crap going on this week. HBO documentary say, we're going to make a documentary about Bitcoin, and we're going to tell you who the creator is. And I don't know, I guess they're desperate for views or something. And a lot of people are concerned about this. I was initially, but then I dug into it and dug into the candidates, and we'll look at that now. But now this stuff is on Polymarket. Who will HBO doc identify as Satoshi? Right now, it's somebody called Len Sassaman. I wrote a detailed report on Len on Patreon last night, so you can all see if, what are the odds it could be. But Polymarket thinks it definitely is. Now, the other candidates who many of us thought for many years, we thought Hal Finney, that was kind of like my number one choice. Adam Back, big shout out to Adam. Out there, Nick Szabo, a lot of people believe it's Nick. Paul LaRue, David Kleiman, I think they're very unlikely, but it's either one of the top four in my opinion, and may Hal Finney and Len Sassaman rest in peace. They are sadly no longer with us. But you can see here, Len is who they believe HBO will dox, as it were, but we don't know if that is, even if it can be proven definitively or not, who it is. And I'd rather just remain a mystery. It's better that way. But anyway, people keep asking me, what about the HBO documentary? What do you think? So this is what I think. And this is the data from Polymarket as to what the market thinks too. We'll see. Oh, one thing I do want to point out, though, is the odds of LEN did drop precipitously. It was at 65, 67%. Now it's down to 43%. So we don't know where this is going to go, but we'll find out very soon. Actually, I won't find out because I don't watch TV, but I will find out on the internet. And I mentioned at the beginning, Blackrock is around the world shilling Bitcoin. This is kind of cool. This is from Bitcoin News. Blackrock says Bitcoin is risk-off, a global money alternative, while Ethereum is risk-on as a blockchain play. Bitcoin is money. The rest of crypto is just a gamble. That's one way to interpret this actual slide. And then many slides as well have been flying around all week. Just check out Blackrock Bitcoin and you'll see all the slideware up online. But it's great to see that they're doing a global roadshow to their clients pumping Bitcoin. And that's reflected obviously in the numbers. And BlackRock has only had 3 negative days so far in the life of the ETFs. And the amount that they've pulled in is astounding in a short window of time. 185 trading days, and they've pulled in a boatload of cash. Anyway, moving on to Bitcoin miners. The production numbers are out for September. A couple of interesting things. We have Marathon doing 705 Bitcoin, CleanSpark just shy of 500, 494, Riot 412, Iris 347. I do want to point out as well, the top players all did better month over month, whereas many of the others didn't. That's Riot, Marathon, CleanSpark, Iris, all had production go up in September. Obviously, they're replacing old rigs with modern rigs, getting more effective and efficient. And some of them have just dropped off the face of the earth, like Hut 8. They had about 85 or 84 Bitcoin last month. That was August. And now it's 72. So that's really reflective of kind of their old rigs. And a ton of hash, which is kind of crazy. So I don't know where all that hash came from, but something weird with the numbers and the machines and everything else. But you've got to have the leanest, meanest, most effective, most efficient rigs to be able to compete, especially in this post-halving world. And again, the miners are now reaching equilibrium. They had a couple of good months, but now the pressure's really on, and now they're getting half of what they used to. So that's all come through the system. We just need for the price to hit equilibrium as well. Let's talk about crypto. AI narrative is still top over the last month. You can see Bitcoin is up 10.4% over the last month. Ethereum up 1.7%. Ethereum has disappointed a lot of people this year, and we'll see. Let me see what else. Bridge number 2. And real world assets number 3. So they're the hot narratives to watch as well. DPIN actually is all of a sudden at the very bottom. Worst performing sector over the last month, but DPIN was on fire for most of this year as well. Let's go to the Crypto Compendium, find out exactly what's going on with the top performers over the last week. You can see Aptos, Tau, Sui all win the day. Now, Grayscale set up a AI fund, and Tau is the biggest holding, and that's probably what's pumping Tau right here. And of course, Aptos is running on the coattails of the growth in Sui, which is a pretty obvious play. So that's been running really well this week as well. Looking to the right-hand side, all the losers: XRP, Arbitrum, Pepe, ICP, Polkadot, Render's down there as well. Render's an IA play, but it didn't perform, but it did pump a little bit late last week, but earlier in the week it didn't do too well, and all the other names. So that's kind of the state of the union of crypto. Let's talk about stablecoins, because something really interesting happened as well this week. This is Tether. Just in from Cointelegraph, Coinbase is to delist Tether and other non-compliant stablecoins in the EU. They will remove stablecoins that do not meet the EU's new MiCA regulations by December 2024. That was kind of surprising. So what's Europe up to? I mean, if Tether is not compliant, I don't know what could be. We'll see. But let's break it down. Tether as well, an interesting news related. Shout out to Sanjay for this. Tether is the only stablecoin that onboarded the FBI and the United States Secret Service. Tether CEO stated, mentioning that the company also works with 180 law enforcement agencies across 45 countries. Tether also positions itself as a good friend of the US because it holds nearly $100 billion US Treasury bills, making it the largest or one of the largest US Treasury holders globally. So this is fascinating. A lot of people think, oh, stablecoins and Bitcoin and stuff is used by criminals. No, that's been well debunked. But this shows you as well that Tether cooperates with the FBI and all those law agencies that are all over the world. So if you want to do shady things, this is not the currency by which to do it, nor is Bitcoin, ladies and gentlemen. They use fiat for that. Anyway, stablecoin market quick update from Artemis here. Pretty much, you can see green is Tether, and that makes up 75% of the total crypto stablecoin market cap. USDC is 34.4 billion, about 22%. When you add 75 and 22, basically it's 97%, two things with a little bit of DAI sprinkled in, $4.9 billion. The rest are crumbs. And PayPal USD is growing. It's now at $700 million, has a long way to go to catch up with the big boys. And that's all she wrote regarding stablecoins. But interestingly enough, Tether is working with the FBI and the CIA are focusing on Xi. This is, the US has struggled to gain insights in the workings of the Chinese government, with the Biden administration consistently frustrated by the lack of top-tier intelligence on Xi's inner circle. And CIA boosts China recruiting effort to exploit discontent with Xi. I think we should just stay out of these affairs. Let China do their thing. Compete with them man to man, but don't try mess with things. Anyway, that's just me. Anyway, it's important news from the week that you probably missed, and I think it's worth sharing. Also, war and rates rattled markets a tad, but AI did well. Nvidia up 3%, Google 2%, Meta up 5%. In fact, at one stage, if I'm not mistaken, I think Mark Zuckerberg, and Tesla was down 3%, but I think Mark Zuckerberg, the CEO, Facebook, became the second richest man, displacing Jeff Bezos, if I'm not mistaken, but I think it may have changed back again. I'm not sure. Elon's still number one, but it just shows you the richest people in the world, big tech, Tesla, Amazon, and Facebook, Meta. I always get confused. Facebook, Meta, Facebook, whatever. I still know it as Facebook. And of course, I don't use it. But there's probably fake me's out there on Meta or Facebook and Instagram and what's the other place? Telegram. I'm only on Twitter. So just a reminder, people. And we do post our videos to Facebook through a separate service, but I'm not active on Facebook. And I have no profile on Facebook. And there's only one of me on Twitter. So remember, anybody reaching out to you who pretends they're me, they are a scammer. And do not lose your money. Every week we get a report of somebody handing over their money to a scammer. Don't ever do it. Next, we had the biggest ease since C19. By the way, I had some feedback this week. People said I was going too fast, so I'm trying purposely to go a little bit slower explaining these charts. Let me know if the tempo is okay as well. So we had the biggest ease, monetary easing since C19 in April 2020. That is that big spike in monthly number of global central bank policy rate cuts, as well as a ton of money printing. I covered yesterday the amount of crazy debt that it's exploded. Literally $400 billion in 3 days of new debt. It's bonkers. Anyway, the impact of that is shown here too, because despite the positive job market, the 30-year mortgage popped up to 6.53%. And that's a very big one-day move. And there's now a 256 basis point spread. But the point is, a lot of people are hoping for lower mortgage rates so they could buy a house or sell their house to somebody who can afford to pay for the mortgage. But that didn't happen. It's gone the other way. And again, that's just part of markets. I do believe the 30-year mortgage rate should be down by around, right now, currently it's at 30-year fix, call it 6.11%. I expect it to be hopefully down around 4.25, 4.5% in about 6 months or so. Sometime spring, which is when people like to buy houses too, spring 2025. We shall see. So hold tight. And the Eigenlayer apparently was hacked. Update on the Eigenlayer says $5.7 million hack is an isolated incident. There's no vulnerability on the protocol. Eigenlayer is an ETH restaking protocol. And again, remember, when you restake, there's risk, always risk. So be careful with your bags. That's the quick recap for the week. Hope you enjoy the show. Thank you all for coming. And I'll see you all tomorrow for the live Q&A. Big one tomorrow, as always, all the top questions from the week. And we always try to uncover some alpha too that you can use, whether it's around options trading or assets you may want to consider either buying or selling. So thank you all for coming. Take care. Bye-bye.